Welcome, everyone, to Name Confidential Live.
All right, welcome everybody to Name Confidential Live. This is season 3, episode number 8. I'm here with Henry Rohlfs. He's been here every single year, one of the consistent Name Confidential guests that we've had, and he's with Halbert Wealth Management and Theta Research. Henry, how are you doing?
I'm doing great, Ben. I'm really glad that you invited me. Glad to be here.
Well, definitely. Well, thank you for being a consistent part of this each year. I was looking through the last two, and I'm like, I got you the first time, Ryan got you the second time, and then I was able to grab you again. So.
The worst part of it, though, is that I'm getting older. And so when I look at myself on cam, I'm going, oh my goodness. And anyway, there's this little adjustment that you can do in Zoom that says fix my appearance. And I slid it all the way over to 100%, and it did not do any good. So you've got what you've got.
Well, I know I'm on the younger side of name, so I'll get that eventually, but at least for right now, I'm gonna hold on to my youth a little bit. All right, well, first off, we always start off with the name exposure index. So let me share my screen here. And then as a reminder to everyone, the name exposure index represents the average exposure to the US equity markets reported by our name members. Now, I do want to point out one thing here before we jump in. Effective August 1st, 2026, this name exposure index will be subscription based only. Now, if you're a name member or you want to become a name member, you'll be able to access that within that membership. But if you're not, there will be a subscription for it, and you can get an API key if you want to get that data feed sent straight to you as well. And the other thing to note is that if you don't subscribe to it, you'll still be able to see it, but it's going to be a whole 3 months quarter back on the data. So it'll still be there for research purposes, but if you really want to have the up-to-date data, you're going to want to become a name member. Not just for this, there's many other reasons, but this might be icing on the cake for you. Um, then looking at the exposure number for this week, we are at 82.95. Last week we were at 84.69. So not a not a big jump from week to week. I'm not really surprised on that. It does look like we had somebody go a little bit bearish there, but
Hmm.
nothing too crazy. Henry, what are your thoughts on the name exposure index? Do you use it? Do you contribute? Just anything that you want to add?
Oh, we absolutely contribute. And it's really interesting for me to see where the index is now. We have for quite some time um, been two-thirds of 2x long equities. And so we've been quite bullish and have stayed that way. The only time we weren't was right around April. And actually, if you look at the graph, you can see the dip that's right about at April. And we actually could not quite catch what the market was going to do. And so we went neutral and for that whole time period, and then eased back into pretty much two-thirds of 2x long, so 130%.
No, that makes sense. I remember that April March time frame was it almost felt like we were in Groundhog Year for different reasons because it was in the previous year, first quarter, March, April, we were experiencing everything with the tariffs, and then we got the war
Right.
with Iran. It's just it's been a little crazy 2 years back to back.
Well, and it's interesting to me because there's still quite a bit of unknown when it comes to the war in the Middle East and everything that's happening out there. Although oil prices have been substantially lower than they have been, I still saw this morning um, that Brent was around $75. WTI was about 71. So, it's a nice range, but it does look like it's fading up just a little bit since it looks like the U.S. is going to be engaging Iran more. So we'll see what happens with that. But I'm really surprised that the market is still quite bullish. In fact, do you know what this week is, Ben?
No, what is this week?
So in Spain, in Pamplona, Spain, this week is the running of the bulls.
Oh, okay.
And you might remember, for folks who are readers, that Ernest Hemingway's book "The Sun Also Sets" brought that, I think, to light to most Americans at that point. But yeah, the running of the bulls is happening, and I really think that the bulls are going to keep running in the market as well through the rest of this year. I don't see a lot of negative at this point that is going to stop that, especially now that SpaceX has slid in today to the NASDAQ. That I think is going to fuel the NASDAQ more. We're going to see more highs. So it'll be really interesting to watch.
Yeah, that was one thing I was kind of interested to see your thoughts on that because SpaceX is supposed to be, if I understand it right, the start, and then what is it, Anthropic and some others will be going in at later dates.
Yeah.
Is yeah, do you have any thought on that new process for how they get brought into the Nasdaq 100? They don't have the same waiting period that other stocks had before, and but it also sounds like they're coming in at a much lower level than the initial introduction rate.
Right. And I know that the understanding is that those stocks already have quite a bit of pull on the market as a whole, especially in the tech sector. Um, and the NASDAQ is pretty heavy in tech sector stocks. I don't know how I feel about it. I was asked that recently, and I'm at a wait and see. Let's see what happens. But it's really interesting that NASDAQ changed the rules. And we're going to see these new tech stocks, these new IPOs get slid into the index a whole lot earlier than normal.
It's gonna be a ride to watch and go all different directions. And that's sometimes a fun part of the business is
Right,
not
right.
knowing and having to see something new transpire.
It's like buckle up and let's see where we head.
Right. Well,
Let's see where the
perfect.
rocket takes us.
Oh, exactly. Well, I know you have a few things that you want to talk about. The FOMC I have written down. Do you want me to take my screen down and then we can switch to your screen?
That sounds great.
Perfect.
I just have one slide that
Okay.
that I'm going to share, and let's see. And here we go. Did that did that slide pop up?
Yes, now it did. The dot plot,
Okay,
I see it.
super. So 2 days ago, we had the minutes from the last FOMC meeting that were released. And one of the things that I found really interesting, first of all, is if you look at the 2026 set of dots in the Fed dot plot, you can see that there was a propensity at the meeting to raise interest rates. And that kind of makes sense because we're seeing uh, uh, that employment is holding steady, relatively steady. We don't see job losses going much over. We're staying at about 4.2, 4.3 for the unemployment rate. So that's looking pretty good. And it's what's going to happen with inflation. And so like I said, there was this propensity in the FOMC to raise interest rates. Now, what really was interesting was reading the minutes, because in the minutes, every member, 100% of members, agreed to pause rates in
Hmm.
June. Um, Even though that there was some arguments that there was a case for raising interest rates, but they held interest rates 100%. And so that tells me that even though that the committee was pretty divided, um, they actually are arguing that they really don't, that they're looking to the possibility of raising rates, but at this point, they have to wait and see what's going to happen. There's still a lot of things that, like we've mentioned earlier today in this broadcast, that are affecting the markets, that are affecting inflation, that I think the Fed is just pausing to see what's going to happen. But the other thing that I thought was interesting is they revamped their post-meeting statement. So they removed a lot of the language that previously had indicated a bias towards future rate cuts. And if you look towards the dots, particularly here in 2027, you can see that there's a pretty much a split decision. Oh, by the way, the blue line is the current rates at 3.5 to 3 3/4. So you can see that there's a very much a divided FOMC going into the new year. So for the calls that people, I've heard people say, oh, there are going to be 3 rate cuts. That's certainly not going to happen. I think that if we get anything, there might be a slight raise at the last meeting of the year. But I think at this point, there's actually a very good chance that rates are going to be held steady. What's that going to do to the markets? Well, we have to wait and see. But I think that with rates being held steady, that does help the markets to keep on a bull run, because then there's not the uncertainty of the FOMC changing things, changing the environment. How
If
do you
there's a
feel about that,
theme,
Ben?
if there's a theme for today, it feels like I've been hearing wait and see a lot from both of us. So we're in a big wait and see moment. Um, yeah, I mean, I didn't see this until now, but I do kind of share the same thought that, more likely to stay the same with a slight chance at an increase, but I would probably guess staying the same. The market overall, that's going to help kind of keep the run going. Um, so I'm right there with you on similar thoughts.
Yeah, of course, that's not going to do well for mortgage interest rates. It's not going to help the housing market as much. Right now, I checked the 10-year Treasury, and it's holding right around 4.55. So it's actually eased up a couple of tenths over the last month. Um, so yeah, that is a little bit of concern in what's going to happen in the bond markets. But with yields, treasury yields going up, that helps them a little bit. But again, mortgage rates are they're going to stay where they are. And of course, we know that housing costs is a considerable component of inflation, the inflation read. So we'll have to see what happens with that.
But wait and see.
Yeah, once again,
Let's see. So this was the one slide that you had. I think, was there anything else, or do you want to jump into kind of what is and we've discussed it a little bit, overall market outlook, at least, for the rest of this year, and then anything else that you're seeing that you want to bring up? We've kind of skirted around many different topics just a little bit here.
right. Well, one of the things that I know that people like to hear is investment philosophy.
Mhm.
And that's something with Halbert Wealth in particular is we try to encourage our clients, and nearly all of our clients are high net worth or ultra high net worth. And we encourage them to get into um, investments that aren't going to be held hostage to whether the market goes up or down or interest rates fluctuate. So a lot of the things that we look at are long term. We do a lot of private equity, and we're seeing that that's a really good spot for our clients at this point. Private credit is something that's getting a lot of press right now, with actually good reason, because there are some very good private credit funds out there. Is there going to be a bubble? I'm Again, wait and see. But the large firms that are doing private credit, without naming anybody in particular, the very large ones are going to do quite well. And the same in the private REITs space. That's something that we have encouraged our clients to take a look at as well, because that's something that will hold its value in long term, and again, not be held hostage to what happens with the stock market.
Okay. Well, perfect. Yeah, I remember our talk about private equity 2 years ago. watching a little recap on that. I guess I'm curious and thinking back over the last few years, what has or hasn't anything changed in your investment philosophy?
At this point, no, things have held actually quite firm. We have seen some of the investments. We have a money manager that specializes in stocks with very large companies, legacy type firms that have not done as well. Basically because so much of the movement in the markets have been in tech. And so we have taken some of the positions with our clients that were in those stocks and moved them out into something different. Um, Active management has become really important now. And I think that the managers that we deal with, like yourself, who have active management uh, type strategies, are actually doing quite well. And we're happy to be associated with them. And we've actually pivoted some of our clients' assets into those.
Okay. I'm always curious on the theta research side. Is there anything that you're seeing within the active strategies there that you find kind of interesting over the last years or so?
Hmm. Um,
I know I didn't tell you I was going to bring this up. I just thought of it right now.
Yeah, it's a little hard for me to tell because I'm quite myopic with the individual strategies. I see each one, and I really don't get a really big picture. I have seen that. Um, let's see, some of um, the biggest thing is multiple inputs.
Mhm.
Um, I've seen some strategies that have relied on one input or two inputs with their strategy that have not done well, and they have fallen to the wayside. But it's the ones who are looking at multiple inputs, multiple indicators that seem to be doing far better this year.
That definitely makes sense. That's something that we understand at Scarecrow, or at least we believe in having multiple inputs, multiple disciplines to look at.
Yeah, definitely.
Because there are some that just, you get into a bad market you're in, you're done. That just because of the one thing that you're looking at. So, hmm. Well, no, I know I usually ask about investment quote, but I believe I've asked that last time. Is it the same, or do you have a new one?
I have a new one.
Yeah, new
Um,
one. Perfect.
And, I started thinking about that this morning, and I thought, what is the most important thing to Henry? Is it investment style? Is it how I save or invest my money or what I do for work? And it really isn't. And it comes down to actually something in Proverbs chapter 22, and that's a good name is more desirable than great riches. To be esteemed is better than silver or gold. And that's one of the things that we've tried to uh, really teach our children and our grandchildren that integrity is the most important thing. It's fine to have a good business that makes a lot of money, but you have to keep your name and keep your integrity. And I have to say, Ben, that's one of the things we've appreciated over the years in our dealings with Scarecrow, is that you folks really abide by that.
Yeah, I can definitely say, my father does integrity is a big thing that he puts down there. And yeah, I believe in that wholeheartedly. And personal side, I believe that in the system side too. So no, that was really good. I haven't heard that one yet, so it's always nice to get a new one out there.
Oh,
Well,
fantastic.
yeah. What is there anything else in the investment realm that you're just kind of itching to tell people or that you think might be some good advice to put out there?
Wow, at this point, we keep saying wait and see. Um, and I think that's been a big part of it. is stay the course to what you believe in, and what has worked. I know that as the when we were talking about the name index, that March April was pretty brutal for some folks. But for the ones who stayed the course, I think they've come out the other side pretty well. I know we have, and I think that would be an important lesson, is to stay with what you believe.
Yeah, there's been a few periods of really testing your resilience as a money manager to stay to your philosophy. And that's one thing that I've learned the most about over the 10 plus years that I've been in the industry is just how often you do get challenged, but then also how to take or ground yourself with the philosophy that you have. You know,
Mhm.
because your emotions, everybody's emotions are going to hit a certain point where they start feeling one way or the other. And managing that, the what's that
Right.
called? Behavioral finance side of it is very, very important. Going back to kind of the integrity of the system and, and all that.
Exactly. Yeah, I couldn't have said it better.
Let's is there anything else? If not, I don't know if we have much information on Outlook yet. We probably have the dates. I forgot to look at that. Let me look in the back
The
quick.
dates are out, and I forget what they are. But I can
I got it
say
right here.
I know it's coming to Texas.
October
Yes.
26th and 27th.
Oh, there you go. Thank
Dallas
you.
at the Westin Dallas Fort Worth Airport.
Yes, there we
Perfect.
go. Oh, so coming up, August 1st. August 1st is a big date, not only for the Outlook conference, but also going back to that name exposure index. If you remember, early registration ends for 638, and then it goes up $100 if you sign up after that. Non-members you're at 898, so we're looking at 100, $260 right there more to just become a member. That's all you got to do. Become a member, you save money. You get a lot out of it. You get to talk to people like me and Henry there and a lot of other folks that have great wealth of knowledge to share. You can watch some of the other name confidentials to see some of the other name members that like to go to those conferences. And I love UK, but I really love Outlook. One, my brain is always a little bit mush after the third day at UK. So Outlook being 2 days, it's like the perfect amount for me to go full force into the knowledge. And it's a little bit more tight knit. So you get to talk to not as many people go as the ones that go to UK. So you get to talk to people, build your relationships a little bit more and still get a nice amount of knowledge from the speakers that we have. And I know they're
Right.
working on the agenda right now.
Well, from what I understand, we have a few speakers who are going to be focusing on the use of AI, another big hot topic in the investment world. Yeah, I'm looking forward to that.
I remember Outlook, like I think it was 3 years ago now, and they were kind of starting to bring up AI. It might even have been this conference that's pictured down here. But they were starting to bring it up, and whoever was speaking about it said, just watch, because in each year you're going to see it more and more. And I just remember that sticking in the back of my brain. And each year, more and more and more. And it's crazy to think of where it just was even 3 years ago to where it is today. And things move fast. You definitely cannot fall asleep on the wheel, at least for paying attention to that.
Boy, that's the truth.
Well, I think we covered mostly everything. I want to thank you, Henry, for all of your great wealth of knowledge that you brought to the name community here and everybody else that's watching it. Thank you once again for being a consistent participant in Name Confidential. And I can't wait to see you next time.
That sounds great, Ben. I look forward to it.
All right, well, thank you.